Hello and welcome back to Core Finance with me, Matt Brown. This is the second of two videos today with Rahul Khanna, who is an FX strategist at TraderMade. Now, we looked at FX in our previous video. We're now going to look at the markets, or the US markets, I believe. So we've got a few slides that are important to look at, and we start off with the 10-year Treasury yield. Can you just talk us through this?
Yes, so 10-year Treasury yield, I think a couple of weeks back I was doing a video with you guys, and CPI was supposed to come out, and I said the crucial level was I think 2.22%, which was a bit of a support area, as you can see there. That was broken, which has now been broken, and I think next level is around 212, and that's the area which is now crucial, because if we have that broken, we can see that this outlook of market where people are thinking maybe the yields are basing, and that's the general view that market looking at, that will be broken, at least in terms of US yields, which means that will have wide repercussion across the board. So I think that single chart is very important for people who wants to have a view on dollar. Or even to some extent equity markets. That's the level we're looking at. If that breaks, we're back, maybe testing 2 levels, and maybe even lower than that, which will break this view that treasuries are sort of yields are basing out.
Yeah, so it would be an interesting move. So potentially we could see these yields go lower, though.
In terms of view, I think that's what I'm saying is very crucial. I mean, I should relate this to Jackson Hole, which is coming on Friday, what Yellen says. And I think market is sort of optimistic that Yellen will keep this view that we still possibly might have a December rate hike, which is currently around 40% priced in. And what will push the yields lower is if Yellen comes out and says something which means we might not see a December rate hike, and that will push the yields below that 212 area, possibly to 2 area and even lower. If Yellen comes out and supports this view, or even if she's neutral, I think market is sort of fairly positive dollar. As you can see, dollar is finding some support, as we'll talk in the next chart. That if that does happen, as you can see on dollar index,
yes.
We've seen some consolidation above the 92.62 support, which I again mentioned in the video I did with you guys. It's gone nowhere, as you can see, but it can quickly break those 2 levels if, like I said in the previous chart, if yields were to break the 212. That's why it's crucial what Yellen says. I think market is sort of optimistic that she will keep hopes of people thinking for a December rate hike. So that's one of the factors the market looking at, and that could mean, we don't see that being a game changer, but we think that could mean that the dollar index might rise higher from here and probably test that 94.80 downtrend that we see coming now. So I think that could happen, which means the fears will alleviate about dollar breaking lower. So I think there's risk to dollar if Yellen is sort of bearish
or dovish, yeah,
or dovish, but if she's neutral or slightly hawkish, I think that fear will alleviate that yields are breaking lower, or people will still hold on to that view that maybe yields are basing and bonds are topping.
It does feel that way. If comments are neutral, the market will probably take that as a hawkish.
Yes, so that's the thing. So we've seen Dudley have a similar comment. He didn't change the view on what Fed should do given we have a CPI miss. I think Yellen will reiterate the similar message because they don't want to bring turbulence into the market, which means they would sort of support dollar at these levels. But that does not mean that dollar is out of the woods. And I think that would just mean the dollar is sort of going to avert that risk of a further fall. But another thing that I think is important to look at is what's happening with the Trump administration, right? Market, as you can see, all these moves are partially due to Trump saying something about, or market looking at saying, oh, well, the tax reforms are not coming.
Yes.
And then all of a sudden they go, well, Trump said something that they're going to be they're going to have a government shutdown. They're going to go for that to get budget passed, and all of a sudden you see uptick in dollar. These are all noises, I think. So September could be very important post what Yellen says. I think it's going to be a period of consolidation for dollar until data clears something for the investor, because I don't see even Yellen hawkish comments becoming something for dollar to rally significantly higher, because all it means is we probably have a December rate hike, but I don't see that being fully priced in, because what Yellen says now will not decide what happens in December. We're still a bit far from that point of view. From that point,
and also trading it. If we look at the next dollar yen,
yes,
it's obviously a key currency pair. Just talk us through. I mean, we have seen flight to the yen, certainly ahead of weekends. People are aware of what's going to happen with Korea, what Trump's going to say, what he's going to tweet over a weekend. So we're looking at now, added to that, we've got Jackson Hole Symposium this weekend. And how do you think dollar yen will play out ahead of the weekend?
So I mean, just last week we saw dollar yen sort of recovering from that key 108.90, just around there. It had a false break. It recovered from that area. Market said, all right, this is the time where build dollar yen longs, because maybe this is basing out. It's tested that level quite a few times. So market became sort of positive on dollar, but then we sent another rejection on dollar yen from that very key level at 111. As marked there as 110.97. It's around 111. I think that's the area, that's the level we're now watching. If that breaks, you can see that probably will form a double bottom there, and then maybe it will give market encouragement. If you look at, and that will only happen if Yellen is a lot hawkish. The way chart sits at the moment, like we said, dollar yen is still there's a risk for it to go a bit lower. I think it can very easily test that 107.50, 108.15 area. And I think the view is sort of choppy at the moment. So even if Yellen is neutral, I think the market will remain in that 107.50 to 111 range. And we would need to break either side, for market to become, have a view on dollar yen. Dollar yen, as you can see, has been ranging in a really wide range. And I think this is now the time for probably a narrow range, as we can see. But either way, 111 needs to break for us to become dollar yen bullish. And I think that will only happen if, with a mix of things. One is Yellen is more hawkish than neutral. And we would need to see some positive data coming out, some positive development from America or Trump administration for us to look for this trend to reverse. At the moment, it looks like there's some choppy trading ahead on dollar yen.
Understood. Well, Rahul, thank you very much for joining us today, and lots to think about there.
Thank you.